Good morning and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check what happened on Friday. Now, global stocks finishing the week mostly positive as a subdued US inflation report boosted expectations of another large interest rate cut from the Federal Reserve at its November policy meeting. On Wall Street, the Dow closed at a record high, while both the Nasdaq and S&P 500 slipped a little lower, and the small cap Russell 2000, that was the biggest mover. Shares of Nvidia weighed on the Nasdaq. Costco Wholesale fell after posting downbeat fourth quarter revenue. Bristol Myers Squibb rose after the US FDA approved its schizophrenia drug. And US listed shares of Chinese firms such as Alibaba, PDD and NetEase gained after China's central bank lowered interest rates and injected more liquidity into the banking system. And the miners extended their gains, led by lithium producer Arcadium, while US listed shares of BHP and Rio also gained. Well, US consumer spending increased 0.2% in August, which was less than forecasts, suggesting the economy retained some of its solid momentum in the third quarter, while inflation pressures continue to ease. The personal consumption expenditures price index rising 0.1% in August after an unrevised 0.2% gain the previous month. Annual core inflation advancing 2.7%. And the Fed tracks the PCE price measures for its 2% inflation target. Financial markets now seeing a roughly 50% chance of another half percentage point rate cut at the Fed's November policy meeting. That's according to CME's FedWatch. Meanwhile, US Treasury yields fell on signs of inflation easing further, while the ongoing conflict in the Middle East also pushed Treasury prices higher as investors opt for a safe haven, pressuring their yields. The 10-year sliding to 3.75%. And the 2-year was down 6 basis points to 3.56. The US dollar fell following that inflation data, while the yen strengthened after Shigeru Ishiba, who is seen as an interest rate hawk, was set to become Japan's next Prime Minister. And the Aussie is trading at 69.2 US cents. Let's now focus what's going on in India and the market there. Mugunthan Siva is joining us from India Avenue. Maguinton, good to see you.
Likewise.
We sort of get a monthly update from you, I guess, on what's going on in India and globally. I mean, when you look at comparisons there, it's actually been doing very well, the local market. Why is that?
Well, I suppose from 18 months ago, but and maybe even going back a little bit further than that, local investors have come to the party and been very structural in their patterns of investing, monthly investment plans, which has pushed the market higher and higher to the point where they invested about 23 billion US last year into markets, and this year it's well over 30 billion, and that's fueling the market rally.
So how's it priced at the moment, particularly in terms of forward earnings?
Yeah, look, 1 year forward earnings on the MSCI India is not cheap. It's 23 times plus. If you look a little bit further out, probably India has a little bit more of a robust earnings profile than some other regions, so you could justify it maybe on a 3 to 5 year type of outlook. But on a 12-month basis, India, like it perennially does, looks expensive.
So given those valuations there, what are the local investors doing then?
Local investors' penetration into investing in equities is still 6 or 7%. So if you go back, say, to the US in the 1980s when equities became a form of wealth generation, a similar sort of thing is happening in India, where people in rural villages are investing in mutual funds. They may not even know what a mutual fund is, but they've learnt from friends or relatives or through education that it's a way to generate wealth.
That's interesting. So the rise of the middle class turning to those risk assets of investment.
Correct. So if you look at India's interest rates, they're not really any higher than where they've been in the last 20 years, which is completely different to the rest of the world where rates are much higher. So equities are seen as a better place to generate wealth than some of the other asset classes.
So what is the cash rate at the moment, and what are the prospects, and just in terms of, given the global easing cycle is now underway, where does India place?
Yeah, I think the central bank has been relatively hawkish in their stance on guarding against inflation. Inflation can be extremely problematic for countries like India. So cash rates are at 6.5 at the moment. Inflation is around 3.65. So there's scope for cuts. With it, oil prices have come back to about $70. The monsoon was within expectations. So all the things that traditionally could impact inflation seem to be, at least in the medium term, contained.
All right, so the economy, showing strength, and I guess also in terms of that inflation and those costs, clearly oil prices are very important too.
Yeah, that's right. Look, GDP hit a peak of about 8.2 earlier in the year. Now that's come off a little bit to the high sixes. So there is some signs of a slowdown in momentum, but you would agree that probably 6.7, 6.8 is still quite significant relative to other economies.
So you mentioned what local investors are doing. What about international then? Are they gone more underweight given the valuations there?
I think pretty much every emerging market fund is underweight India, bar a few, and that's at the active investor level. Where money is flowing in is at the passive level. So if you think about a US dollar falling, probably a weaker US economy, then typically in this environment, investors look to go offshore, and India and emerging markets are, potentially showing signs of improvement. So passive money is getting allocated to India through it being 20% of the emerging market index.
I did see some data saying, given that interest rate where they are at the moment, foreign portfolio investors have continued just in terms of those inflows there for the fourth straight month. In fact, saying that foreign portfolio investors bought close to $6 billion worth of Indian equities in September.
Yeah, that's right. So that's part of the overall EM trade, where more is getting allocated to that space, particularly a new structure which is EM ex-China, which has kind of evolved in the last couple of years. India would be a very significant part of that, over 30%.
What sector-wise, what are you seeing as performing and what's underperforming at the moment?
There's been a bit of rotation. So, we saw areas like banking underperform significantly, and banking is probably 30 to 35% of the index. So that's been a significant pullback on where the index could have been. But what has been the driver is healthcare, sectors like healthcare, real estate, industrials that have delivered outperformance, which are smaller weights but have performed significantly well. I think I saw an interesting stat the other day that since COVID, of the top 500 companies, 90 of them have been five baggers. So it's really been a stock pickers market. If you can identify the right sector, the right company, there's been no other market where you've had so many multi-baggers as such.
So Magunthan, where are you seeing the opportunities going forward then, particularly as I guess we see that increased competition with China at this point?
Yeah, look, there's certain areas where we think India has levels of expertise. IT services continue to be an area where they will increase their market share economically. That's not a new story. But as we've talked on this show, pharmaceuticals really is where India has built a niche of being the world's biggest generic exporter. Pricing power has returned a little bit to that segment. India has over 100 FDA approved plants, which is the second outside of the US itself. And no one can compete at that price and that scale. So that's certainly in our portfolio. We have close to 20%, whereas the benchmark is more like 5%, because we think that's the next IT services industry for India.
And fiscally, where are we seeing the spending at the moment? Obviously, given Narendra Modi won that past election, he has that mandate. What's his policy at the moment?
Yeah, so the government has spent a lot on capex, on infrastructure. Now they probably need private investment to step up to the plate. That's been really what has been lagging to a large degree. It's all been fueled by the government, which typically in history tends to lead to private investment rising. Infrastructure, I would say only 20% of India's infrastructure is built, and that's after significant investment in the last 5 years. So there's a long way to go to make it logistical cost to GDP much lower than what it is at the moment, because India's got one of the highest logistics to GDP. So that's really where investment has to go to make it more productive.
So what's the investment thesis then as far as infrastructure is concerned? I mean, is that a place to be then?
It is. I think definitely the government has laid the planks of, more airports, more ports, more investment in railway, more investment in roads. Now, with that government spending in the backdrop, it makes it more productive and a greater ROI for private investors to step in and do public-private partnerships or direct investments themselves.
Maguinton, always great to get the investment outlook there in India. Thanks so much for joining us from India Avenue.
Thanks, Andrew.
All right, let's round out the global view with a look at where we're going to begin. There you can see SPI futures up more than 0.25%. That would indicate a new record, particularly on the ASX. So we'll see if that transpires when we get going in just a couple of minutes' time.